All right, let's break down the latest earnings from Cintas. Now, on the surface, the numbers looked fantastic. I mean, it was a textbook beat and raise. But the way the stock traded tells a much more interesting story. It's about a great quarter that, for some reason, just wasn't quite enough for the market.
And that right there is the big question we're going to tackle. You've got record revenue, you've got margins expanding, and management is telling you the rest of the year looks even better. So why did the stock pop at the open and then just fizzle out? That's where we find the real story hiding beneath the surface.
And this chart, wow, it just lays it all out for you, doesn't it? You can see that initial burst of excitement right at the open. The stock jumps about 4%. But then look what happens. Throughout the day, it just leaks, all the way back down to a pretty modest 1.3% gain. That gap, that's what we're here to explain.
Okay, so first, let's get into the numbers that sparked all that initial optimism. Because honestly, when you look at the report on paper, this quarter was an absolute powerhouse.
First up, the bottom line, earnings per share. It came in at $1.21. Now that's an 11% jump from last year, and it beat Wall Street's guess by a penny. Not a huge beat, but hey, a beat's a beat, right?
The top line, though, that was even more impressive. Revenue hit a record $2.8 billion this quarter. That didn't just squeak by expectations, it beat them by a solid $30 million.
And you can really see the momentum building here. That revenue number is more than 9% higher than the same time last year. And what's really healthy is that most of that, 8.6%, was pure organic growth. This company is firing on all cylinders.
Now here's what's really crucial. They're not just getting bigger, they're getting more profitable. Gross margin actually expanded to over 50%, an all-time high. That tells you their operations are incredibly efficient.
So no surprise, the main uniform rental business is still the engine of the whole company. But what gets me excited is that other slice. That's where you find their first aid and fire protection stuff, and that part of the business grew over 12%. That's your growth story right there.
Okay, so if all the numbers were so good, what gives? Well, now we get to the heart of it. This is where we find that disconnect between a really confident management team and some very subtle worries that the market sniffed out in the details.
And management really did back up the strong quarter. They raised their guidance for the full year for both revenue and earnings. I mean, this is exactly what you want to see. They're not just saying, hey, we had a good 3 months. They're saying, and the rest of the year is going to be great too.
And if you listen to the earnings call, the tone was just pure confidence. They talked about customer retention being at an all-time high. They're still making smart little acquisitions, spent $85 million just this quarter, and they're just executing flawlessly, even with all the economic uncertainty out there.
But then came the Q&A session, and this is where the smart money starts digging. You know, they asked about tariffs, about how growth might be tougher to come by later in the year, but it was that last little nugget that really caught everyone's attention. Management actually flagged a specific future hit to their margins. And there it is, straight from the CFO's mouth. They're being upfront about a future cost from a big system upgrade. Now, the market hates surprises, but you know what it does with known negatives? It prices them in immediately. And putting a number on it, 100 basis points, gave the market exactly what it needed to hit the brakes on the stock for the day. So pulling this all together, what does it mean for the stock from here? Let's put all the pieces on the table and give you our official view on Cintas.
We're rating Cintas a market perform. And what that really means is we see a perfect balance here. You've got a fantastic, best-in-class company, but it's trading an evaluation that already reflects that perfection. There's just not a lot of room for upside from here.
So here's how we're thinking about it. The bull case, it's undeniable. This is just a phenomenal business. The bear case, though, is that the price is already pretty steep, and now the market has this new thing to worry about with that margin pressure in a couple of years. So what's the outlook? We think the stock is probably going to trade sideways for a while as those two forces have a little tug-of-war.
Okay, so how could you actually trade this view? Let's walk through one potential idea. And as always, this is just for discussion, not a recommendation.
A really interesting way to play this could be a classic pair trade. So you'd go long Cintas because you want to own that high-quality defensive business. But at the same time, you'd short another industrial company, one that's maybe a little lower quality and gets hit harder when the economy slows down. The idea is to capture Cintas' strength relative to its peers while kind of hedging yourself against the whole market going down.
And of course, we have to close with our standard reminder, all this analysis is just for informational purposes. It is not financial advice.